Hey, Sean here. In this video, I want to give you a demo of the new retirement calculator. Now, we know there's a lot of retirement calculators out there, but we wanted to save you guys time, put one in Tykr, and then show you some outputs based on if you're on track or if you're not on track. Not a lot of calculators do that. We wanted to do that for you. So I'll show you a few examples here and what kind of outputs you can be looking at. All right, I'll share my screen. And if you go to the web app, this is also in the mobile app, it's right below the 4M Confidence Booster. All right, you're going to close the menu. Don't worry about the numbers on the right. If you're new to the tool, you're not going to see anything yet. You need to do this first, and then it's going to populate the results on the right, and then it will save those results. So you can keep reverting back to this just to kind of look at a benchmark over time. All right, so let's say in this example, age 30 is your current age. Your goal retirement age, let's say it's 60 years left before retirement. You can see here it does the math for you. Then years in retirement. Now, this is a bit of a morbid question, and you guys can roll over the tooltips here to see. I'll just kind of summarize this. We know we're not going to live forever, so you have to start thinking about, okay, so if I retire at age 60, how many years do I expect to live past that? So most people put 20. You can use that number. If you're really healthy and you want to put like 30 or 40, you do you. In this case, I'm just going to put 20. All right, lifestyle costs before retirement. That's like, okay, to pay your expenses, to enjoy your hobbies, to do what you want to do in life. How much are you spending per year? So you should have some idea of what that looks like right now. You can kind of guesstimate. So I'm just going to put 50,000 here, just as a nice round number. Then let's say your current portfolio size is 10,000. We're going to start with a smaller number here. And then your annual contributions, let's actually change this to 6,000. It's a nice, easy benchmark to think about. It's like, okay, so $500 a month, I'm investing in a few strong stocks. And then we're looking at our rates of return. So with Tykr, of course, we teach you guys about wealth building mode. There's wealth building mode and wealth protection mode. Wealth building is when you're still working and you should be investing in between 10 and 15 individual stocks. That's where you get those returns or aiming for returns between 15 and 50% per year, as Phil Town teaches us, Warren Buffett teaches us, so on and so forth. When you're in wealth protection mode, not wealth building mode, wealth protection mode, that's when you're protecting your money. You should probably lean towards putting it into ETFs, index funds, or mutual funds. That's, you're nearing retirement, nearing financial independence. Maybe you sold a business, maybe you sold real estate, or maybe you inherited some capital. Funds are a great place to go. Set expectations. Your returns are going to be a bit lower. You should expect between 8 and 10%. I'm going to the bottom end of that number. Let's just put 8%. All right, so looking on the right, here's what we're ending up with. Portfolio at age 60 of 3.2 million, your lifestyle cost, because we're going out about 30 years in this case, it's 121,000 a year. And you can see here, will you run out of money? The answer is no. Based on your account size and lifestyle cost, you will not run out of money. So I don't see calculators out there doing this. This really gives you a nice firm answer saying, yes, you're on track, or no, you're not. So let's play with these numbers just a little bit. We'll go to age 40 is your current age, let's say. And don't worry about on the right. We're going to make some adjustments here. Your goal retirement age is still 60. Years in retirement, we'll keep it at 20. Lifestyle cost before, let's say, we'll dial that up a little bit. Let's go 60, but let's say your current portfolio is 50,000. And then your contributions, let's keep them there. Percentages will stay at 15, and then rate of return 8%. You can see here, you're still not going to run out of money. You're in a good spot. I know a lot of people out there, they're worried they're not further along. Well, when you use the power of compound interest, it really does a lot of hard work for you. Now let's go ahead and do this. Let's say your average returns are not 15. Let's say they're like 17. All right. You see that? Let's go back here. We're at 15. Let's dial that back. We're at 1.4 million. Let's say you're at 17% average returns. 1.9 million. Let's dial that up to 22%, which is possible. You're up to 4 million. I mean, compound interest is serious business. All right, now let's use an example where you're not on track. All right, keep your age at 40, goal retirement age at 60, years in retirement, keep it at 20, lifestyle cost at 60. But let's say our current portfolio size is 10,000. contributions at 6, but rate of return, let's move it to 15. You can see here, you're going to end up with, in about 20 years, you're going to end up with $778,000. And as you can see here, yes, you will run out of money at age 71. It will actually let you know what that projected age is. So I'll let you go ahead and play with a retirement calculator. Hopefully it's a helpful tool that you can use to give yourself a little confidence that yes, you're on track, or gain a better understanding that if you're not on track, you might want to change up your portfolio a little bit, maybe increase your contributions. If you got some weaker stocks in your portfolio, you might think about selling those for a profit. We try to sell stocks for a profit, move to stronger stocks, those on sale stocks, especially on sale stocks with a 4M of 80 or higher. All right, hope this video helped. Talk to you guys soon. See ya.